So hi everyone, thanks for having me today. It's really exciting to be here. My name is Michaël Elalouf. I am the CFO at Iwoca. And Iwoca is the leader in small business lending across Europe. And we are a balance sheet business. So our mission is very simple. We want to make finance simple, seamless, and powerful as electricity. So basically, for any small business, we want them to be able to access finance in a very simple and seamless way. I'd like to share one piece of information with you to start with. So if you look at this graph, this shows the evolution of the stock of small business loans across Europe over the last 10 years. And it's quite striking to see that this pool of loans has been shrinking over the last 6 or 7 years. And this despite the fact that governments, public bodies have been trying to push and foster SME lending in many various ways. Second thing is that considers that Europe is that it's a very large market and business opportunity. So there are more than 20 million small businesses defined as less than 10 employees across Europe. And these businesses contribute to 20% of the economy of their respective countries. And still, what's quite interesting is that only 70% of them have no bank funding dedicated to their business. So a lot of them would benefit from a loan, but they just don't have access to it. On the right-hand side, you'll see that's our current footprint. So we launched 4 years ago, and we already operate in 4 countries. The UK, Spain, Poland, Germany, and with that we have exposure to half of the EU GDP, provided that the UK stays in Europe. So the question is how did we manage to make that happen, and how do we cater to this pool of customers, because it's a fairly complex market to tackle. So first of all, we have a great product. It's great because it's very simple. So basically, we just charge interest on the principal that we lend to our customers. We don't charge any fees. It's very simple. And what we believe is that these small businesses that are not typically financially savvy needs to focus on their business and not focus on finding finance for their business. Second thing is it's very fast. So we provide same-day funding. The application process takes typically 5 to 10 minutes. And the credit decision is taken within hours. So if you come in the morning to us, you can get the money in your account in the afternoon. And this is very powerful. And the last point I'd like to make on our product and why it's great is that it's very flexible. So basically, we don't charge any fees, as I said, on early prepayments, on top-ups that we make grant to our customers, because we want to give the full flexibility to the businesses, either to increase their loan size, if they can size an opportunity, say, to acquire stock or to win a market. Or they have, small businesses that have to face issues, typically, a delayed invoice that should come back to them, or taxes that they didn't expect to have to pay. And so we're here to help them when they need it swiftly to cover any unexpected cash flow gaps, basically. And the beauty is that our customers love us. Typically, they like us because we're fast, we're reliable, we're quick, and we have a human face. And it's quite pleasant to work for a company that likes its customer, coming from the banking environment. So the question now is, how do you manage to do that? Because, as I said, to start with, it's underserved primarily because it's very complex to understand and to tackle. And so the quick answer is technology. The slightly longer answer is that we've been developing over the last 4 years a hybrid model, which is human and machine based, where the machine will do a lot of automated work to collect the data, to gather it, to structure it and prioritize it for us to understand each single customer. And each customer is very different for us because each customer is an SME with different business model, different geographies, different dynamics, etc. And our goal is through technology to be able to understand that very quickly and very reliably. And the second step further is with regards to the human interaction with the machine. So basically, we have a team of credit analysts that would do the last mile on the underwriting, and they will approve every loan and take a view on it this is done very quickly, but we do value that a lot because these credit decisions are fed back into our engine, and that's how our engine gets better and better. So this is a bit blurry, so I just want to pick a couple of examples to explain to you how we do things. So these are all the types of data points that we would rely on to take our credit decisions. So if I take the example of an eBay trader, for instance, so we have direct access and build, the data feeds to get direct access not only to the trading data of that customer, but we'd also look at the customer reviews and ratings, etc. And all these pieces of information will give us a reliable view on the health of the business and the ability to repay us, etc. Hence, for our ability to lend their money. Last point I'd like to make is on our traction. So we were launched 4 years ago, and we already have 5,000 customers. We've underwritten 13,000 loans. And if you look at this graph, this is the cumulative loans issued since inception. And what's really cool about it that this has been accelerating recently. So we've been growing faster than we grew before, and we've issued to date 100 million pounds of loans across our 4 geographies. So this 5,000 customers is quite cool, but we have bigger ambitions, and we'd like to finance more than 1 million small businesses across Europe over the next decade. And we will achieve that both by our direct acquisition channel, but also through partnerships with banks, payment providers, and professional software. Thank you.
Thanks a lot. So, jury members, any questions?
Sure. Can you say something about the added value of the manual review process during the credit scoring process?
Sure. So, as I said, we cater to any type of business. So we have e-tailers, we even have restaurants, any service provider that don't have assets to back against a loan because we provide unsecured lending. We even have farmers in Scotland, for instance. And so what we see that we have a very diverse customer base, and we want to understand them well for the risk management purpose, but also in terms of customer relationships. So we do spend 15 to 30 minutes on every case, but this will add a lot of value in terms of understanding the customer, taking a credit decision that will impact, the future lending decision we're going to make. And also, in terms of retention, it's very important to have this human face. As you see, many fintech now have local presences, etc. And it's very important for us to be able to talk to our customers so that we have this interaction and they stay with us. And typically, customers come back to us.
It was interesting to hear Funding Circle before. How do you think about the funding model, peer-to-peer versus asset-based, and to what extent does one provide advantages versus the other?
I think so. We started as a balance sheet lender because we wanted to take principal risk and understand our customers in depth. And typically, when cycles go up and down, it's very important to manage the risk, and that's the core of our business. So I think without having a balance sheet, you might be distracted by other things you want to develop in your business. And if you have the balance sheet, this is the core and the mindset, and that's the DNA of the business. So the first answer. Second, with regards to funding methodologies and sources, we already have a diversified funding strategy. So we have a few institutional investors. We have banks funding us in Germany, in the UK. And our plan is to continue to diversify this as pools of capital.
And a question again about funding, because you're lending out of your balance sheet. Mm-hmm. So as you grow, then obviously you're going to get closer to a model of a bank, basically. Do you think that you will be regulated, or you should be regulated at a point? And which means there's the question about capital, etc. So do you think that it will impact your business model?
So on the capital allocation, I think Tal will tell, we already regulated in the UK, and we're happy with some form of regulation because it avoids other players to go the wrong way. So we're really happy with that. And with regards to becoming a bank, I don't think it's our intent. What we like to do and what we are doing already is partnering with banks to solve their problems without adding problems on our business model.
Are there any questions from the audience?
Yeah. So that's where we start. So typically our goal is to play, in the...
Sorry, should you just repeat the question?
So the question was our pricing. So typically our goal is to play in the business credit card markets, which is, as you said, around between 10, 15, 20% per annum in terms of rate. So yes, that's our goal.
Maybe one last question from my side. How important is retention in your business model?
So we typically target break-even. So our product is typically 12 months duration, and we target break-even after the third quarter. So we'd be profitable on any loan we underwrite on a fully loaded basis. But retention is obviously where we'll create a business model that will be sustainable.
And so what do you expect? Do you expect most to take 2 or 3 loans?
Yeah, so we have data from back to 2012, and we have customers that are still active, and a big proportion of what we lent back then is still outstanding today.
Great. All right, well, thanks very much. We can get a big round of applause for Michael.